Brown and Search. True traders react to the market.
Hi, I'm Kelvin from Brown and Search. Today we'll be sharing with you how resistance is formed and how to avoid resistance breakout fail. Before we start, if you have been watching our videos and find it helpful, please subscribe to our YouTube channel or our Facebook page to get notification on our new videos. Remember to share and like this video if you find this video very helpful in explaining how resistance is formed. Also, don't miss out my personal weekly market outlook webinar on every Monday 8:30 p.m. You can join my webinar by opening a trading account with me. The account opening link and trading account details is in the description box below. Technical analysis was or maybe has been the tools for many traders and investors to time the entry for their investment. However, there is always a doubt on reliability of resistance or support breakout for any entry or exit. Many traders who follow resistance breakout as a form of entry will encounter a problem of resistance breakout fail or getting shaken off by the retrace after resistance breakout, and the price rebound after it hits our cut loss point. We have the same problem above like everyone in the past, and instead of giving up on trading or concluding trading is not the way to invest in the stock market like many other gurus out there, the more we dive into how the big boys operate, the more we find out the traditional way of drawing resistance or support lines doesn't apply in our market. And what you have learned from the internet or the gurus are all too simplified, like the example below on how a traditional resistance line is drawn. Resistance line is drawn based on the previous high of a stock price, like in the red arrow. Many traders will refer this as a point where selling pressure comes in. That's why the price retraces. The more the price retraces at this point, the stronger the resistance. Traders will wait for the resistance line breakout with volume as a signal that the demand is higher than selling pressure, and the trend has changed into a new round of bullish uptrend. When you jump in at the confirmation of the resistance breakout, just like the one in the yellow box, you will feel excited for a few days and the price will start to retrace to your cut loss point. What happened with these stocks? Why the price retraced? Isn't it a strong breakout? To find out why, we need to understand much more about what is resistance. Saying resistance is the point where supply is more than the demand is true. And demand is more than supply when it breaks the resistance is also true. But we need to understand why there is more supply than the demand when it reaches the previous high. When you understand the reason for supply more than demand at the previous price peak, you will know the intention of the resistance breakout is really a trend changing into a bull trend, or it is just merely attracting traders to be trapped in these shares. If the market price is determined by the retail investor, most of the resistance breakout would have peaked at the projected profit target, not higher or lower. Obviously, the supply and demand transactions are done by the big boys. Now we know that the big boys are selling at the peak of the price, which everyone refers to as a resistance. This information tells us that the big boys are taking profit by selling their shares by portion at each of the price peak. This is why a resistance is formed. Buyers will dry out if the big boys continue on with the above operation, and big boys will create the resistance breakout, give retail investor confidence that the stock is going into a bull trend and will fear of missing out again. The big boys don't have to throw the price down like the previous round because they don't have to distribute the amount of shares like they used to hold. Example, let's say big boys' total holding of shares is 1 million units of shares. Usually they will distribute 80% of the shares on the way up. With 800,000 units of shares, they distribute 4 times, which means each time they sell 200,000 units of shares. Compared to 20% of 1 million shares is only 200,000 units. If they distribute 4 times, each time they are selling 50,000 units only. That's why they don't have to sell the shares to a much lower price because the volume that they are selling is lower. They can sell within the day while spending a small cost to maintain the price at the high side to give investor confidence that this stock is bullish. This is the reason behind how resistance is formed, but this knowledge is not passed down correctly and is simplified throughout generation, but don't really understand the reason, intention, and the main components of this analysis. Now you know how resistance is formed and why breakout doesn't really work in the market anymore. Apply the right way in the right market, learn the right way to trade in the stock market. Invest the time to understand the stock market big boys. You may find out more videos about understanding the big boys with our explanation videos at the link in the description box below. Do share this useful video to your investor friend. Help them to understand the right way to invest in the stock market. And don't forget to give us a like and subscribe to our YouTube channel, and see you again in our next video.